So let's take a step back. We've kind of drilled down here into what we have seen thus far in this January and a lot of concern that's being baked in here. But a couple strategists out this morning saying things might not be done. One of them has been a perennial bear, I think it's safe to say, and that's Mike Wilson over at Morgan Stanley. The other is David Kostin over at Goldman Sachs. And he's not necessarily as bearish here. To be clear, he's saying there are downside risks. But he also went back and did some research, looks at corrections that we have seen in the S&P 500, and says that even though those downside risks are there, that historically investors have been rewarded when they get in at the bottom of a correction. Now it's tough to say when the bottom of the correction will be, but this is the research that he provides for us. He says after you buy the S&P 500, if it's 10% up its high, you do well than just in a regular bounce kind of period here. So that's an interesting thing to keep in mind here, even if there's still going to be some near-term turbulence. By the way, Saz, one more thing that crossed this morning that caught my eye from the GDP, from the economics team over at Goldman Sachs. They're cutting their GDP growth forecast for the full year to 3.2%, which is lower than we're seeing the consensus out there.
Top themes, if you're working on a Wall Street strategy shop. One, are you out there downgrading your GDP forecast fast enough because everybody's doing it? And then secondarily, everyone on the street seems to be tripping over themselves to forecast higher rates this year. So far, the winner on that is the team over at Bank of America looking for 7 rate hikes. That's out of Ethan Harris. He'll be on with us later in the show. Goldman Sachs now lifting their rate hike expectations this year to 5 from 4. So these are some of the two dominant themes out there on the street right now. And then looking at Michael Wilson, a friend of our program. He came on about a week and a half ago, stayed true to his S&P 500 4,400 call, struck a bearish tone. Now he's out this morning saying the S&P 500 fair value, Julie, might be 4,000, advising people to stay defensive in their stock positioning. Yeah,
and just to note, he says fair value remains closer to 4,000 tactically. Tactically tends to be a code word for sort of short term, right? This is not necessarily his long-term call. You probably know what's his year-end target for the S&P 500?
4,400, but also too important, Julie, to highlight why he is tactically saying 4,000 might be right here. He just says the Fed, the safety net of forward guidance from the Fed is gone. And another thing to watch out to, and I'm starting to pick up here in earnings. Earnings revisions are starting to come into the downside for many companies, and also manufacturing reads, as seen through the PMI reports. Those are starting to come in a little bit weakish here. So that's the next thing that I think Wilson is looking out for.
Well, it's going to be another busy week for earnings, so we should get some more context, commentary from all these companies about not just what last quarter looked like, but what this quarter and this year are going to look like.